Welcome to Ahead of the Curve from K33 Research. Today is July 28, 2026. A written version of today's analysis is available at k33.com/research. Bitcoin continues to trade in an unusually quiet market. July is on track to become the slowest month for spot trading since November 2023. Futures positioning remains close to multi-year lows, and price has barely moved outside the same narrow range we've been watching for weeks. Markets are waiting for something to happen. That makes this one of those periods where the headlines probably matter more than the price action itself. This week, there are really three stories worth paying attention to: growing uncertainty ahead of the Federal Open Market Committee meeting, strategy quietly strengthening its balance sheet instead of buying more Bitcoin, and the end of BitMEX, once the most influential exchange in crypto derivatives. Starting with the market, there's remarkably little evidence that investors are positioning aggressively in either direction. CME open interest remains near the lowest levels we've seen since 2023. Perpetual futures have been hovering around 300,000 Bitcoin for weeks, and institutional futures premiums remain below 5%. Even options markets only show modest changes in sentiment. The overall picture is one of patience rather than conviction. Investors aren't becoming increasingly bullish or bearish, they're simply waiting. That makes Strategy's recent decisions particularly interesting. Instead of adding to its Bitcoin position, the company has spent the past 5 weeks building liquidity. Its United States dollar reserve now stands at $3.75 billion, enough to cover roughly 2 years of dividend obligations, while its newly announced STRC buyback program provides an explicit floor for the preferred security whenever it trades below $100. It's a reminder that Strategy is increasingly managing both its Bitcoin exposure and its capital structure at the same time. The other major story this week is BitMEX shutting down after 11 years. For newer market participants, that may just look like another exchange closing its doors. For anyone who's been in crypto for a while, it's the end of an era. BitMEX invented the perpetual swap as we know it today, once accounted for roughly 40% of offshore Bitcoin derivatives activity, and fundamentally shaped how crypto markets trade. Its long decline says a lot about how the industry has changed, from a market dominated by highly leveraged offshore speculation to one increasingly shaped by institutions, regulation, and much lower trading activity. All of that brings us to tomorrow's Federal Open Market Committee meeting. Markets remain unusually divided, assigning roughly a 1 in 3 probability to another rate hike, largely because Chair Kevin Warsh has moved away from the forward guidance investors became accustomed to. Interestingly, Bitcoin's correlation with equities has weakened during this consolidation, suggesting the market may not react as strongly as to previous Federal Reserve meetings. Even so, with participation this low, it probably won't take much to trigger a larger move. One final thought: quiet markets often feel uninteresting while you're living through them, but they're frequently when the next trend begins to take shape. Right now, trading activity suggests investors are waiting rather than positioning. The question isn't whether the market will eventually wake up, it's what finally gives it a reason to do so. Thank you for listening to Ahead of the Curve from K33 Research. Subscribe for future market updates, and remember to check out the full report at k33.com/research.